Bitcoin. You've heard the name, right? Of course you have. Maybe you've seen those crazy price charts that go up and down like a roller coaster. But what is it, really? I mean, beyond all the hype and the headlines. Well, Bitcoin was actually born from a pretty radical idea, one that makes you question everything you know about money itself. Okay, let's get into it.
Just think about this for a second. What if you could send money to anyone, anywhere in the world, just as easily as you send an email? No banks, no credit card companies, no middleman taking a cut. This is the big question, the core idea that led to Bitcoin. And to really get why that's such a huge deal, we've got to first take a look at the system we all use every single day.
So let's start with the problem that Bitcoin was actually designed to solve. We can call it money's middleman problem. Because for all the good things about our current financial system, it has this fundamental challenge, and it all comes down to trust.
Think about it. Every single time you swipe your card or send money online, there's a bank or a company like Visa or PayPal standing in the middle. They're the trusted third party. Their job is to verify everything, move the money, and yeah, they take a small fee for doing it. But they also have the final say. They can block a payment or even reverse it. Bitcoin's goal was to create a system that just didn't need that.
And having all that control in one place, well, it comes with some pretty big risks. I mean, we all remember the 2008 financial crisis, right? That completely shattered a lot of people's trust in these exact institutions. If a bank fails, your money can get frozen. And governments, they can print more money whenever they want, which can devalue the cash in your pocket. It was right in the middle of all that chaos that a brand new idea started to take shape.
And this brings us to Satoshi's radical idea. It was a direct response to all these problems we just talked about. A mysterious person, or maybe a group of people, proposed a new system. A peer-to-peer system that could work without having to trust any of those middlemen.
So picture this. It's October 2008. The entire financial world is basically in a meltdown. And out of nowhere, this paper gets published online by someone using the name Satoshi Nakamoto. To this day, nobody knows who that is, but this wasn't just some vague idea. It was a complete blueprint for a new kind of money. And then, just a few months later, in January 2009, the Bitcoin network officially went live.
So what is Bitcoin according to its own creator? Well, it's right there in the title of that original paper, a peer-to-peer electronic cash system. The key words there are peer-to-peer and without a financial institution. The whole point was for one person to be able to pay another person directly with no one else involved.
The promise here was frankly revolutionary. A global currency that wasn't controlled by any one country or any single bank. This meant transactions could potentially be way faster, the fees could be way lower, and no one could just decide to print more of it or block you from spending your own money.
Okay, a currency without a bank sounds amazing in theory, right? But how does it actually work? I mean, if you can just copy a digital photo an infinite number of times, what stops you from copying digital money and spending it over and over again? Well, that's called the double spending problem, and solving it is the absolute genius behind how Bitcoin works.
The technology that powers Bitcoin is called the blockchain. And the simplest way to wrap your head around it is to just think of a shared public notebook, a digital ledger. Every single Bitcoin transaction that has ever happened is recorded in this notebook, and everyone on the network has a copy. And here's the crucial part. Once a transaction is written down, it can't be changed or erased. It's permanent.
So here's how a transaction actually travels. When you send some Bitcoin, your request gets blasted out to the entire network. All these computers check their copy of the shared notebook to make sure you actually have the funds to send. Once enough of them agree that it's a legit transaction, it gets bundled together with a bunch of other transactions into a new block. That block then gets chained to the one before it, creating a permanent, unchangeable record, a blockchain. See?
So who are all these computers doing the validating? Well, they're called miners. And what they're doing is competing to solve a really complex math puzzle. The first one to solve it gets the right to add the next block of transactions to the chain. And for all that hard work, which takes a ton of electricity and computing power, they get a reward. Brand new Bitcoins. That's how new coins are created.
Now here's one of the most important things to understand about Bitcoin, and what makes it so different. Unlike traditional currencies that governments can just print more of whenever they feel like it, Bitcoin has a hard-coded limit. There will only ever be 21 million Bitcoins. That's it. This built-in scarcity is a core part of its design, which is why some people call it digital gold.
So that's the theory. That's the grand vision. But in the real world, Bitcoin has kind of evolved. It's become something a little more complex than just a simple payment system. So let's talk about the reality of it today.
Right now, Bitcoin basically lives a double life. For some people, it's still all about that revolutionary payment network. But for a lot more people, it's become a speculative asset. It's treated like a form of digital gold that you invest in, hoping that its value will go up over time because of that scarcity we just talked about.
And you know, the arguments for it are pretty compelling. It's decentralized, which means no single person or company or government can control it. Anybody with an internet connection can use it. And for investors, the potential for massive returns has been a huge draw over the past decade.
But the risks are just as real, and you have to be honest about them. Its price is incredibly volatile. I mean, it goes wild. Its privacy features have, unfortunately, made it attractive for illegal activities. And if you get scammed or you accidentally send your money to the wrong address, there's no bank to call, there are no refunds, that transaction is gone forever.
And when we say volatile, this is what we mean. Look at this. The price can have these absolutely massive swings in a really short amount of time. It can shoot up to incredible new highs and then crash dramatically and then shoot up all over again. These crazy, unpredictable shifts make it a very high-risk investment. And let's be real, pretty difficult to use as a stable currency for your day-to-day life.
So, what does all this mean for the future? What does the existence of Bitcoin mean for our financial system as a whole? That is the big question that everyone, from governments to big banks, is trying to figure out right now.
This quote really sums up the divide perfectly. You've got people who are absolutely convinced that this is the future of finance, that it will make everything more fair and accessible, and then you have other people who are truly terrified that it's a dangerous, unregulated bubble that could threaten the entire economy. And both sides feel very strongly about it.
But here's the thing that's undeniable. The conversation around money has completely changed. I mean, we now have major investment products like Bitcoin ETFs on the stock market. We have countries like El Salvador that have actually made it legal tender. The core idea of a digital currency that exists outside the traditional system, well, it's not a fringe concept anymore.
Which brings us right back to where we started. For over a decade now, Bitcoin has been forcing us to ask this one fundamental question. Its future is still totally uncertain, but it has already proven one thing, that money, in some form, can exist without a bank. And that idea, by itself, might just be powerful enough to transform our world.